First of all, welcome to all of you. Are you enjoying your time in Istanbul and in Istanbul Blockchain Week?
Yes, it's beautiful, beautiful weather, beautiful city.
Yeah.
You can never go wrong.
You are always welcome. So, today we will be talking about stablecoins are eating finance. So we know that stablecoins are no longer just crypto tools, and they are becoming the foundation for global payments and settlements at the moment. I think this is the next big thing in blockchain and in Web3. So let's start with a quick round of introductions. Can you please tell about yourself a little bit? And after you give the introduction about yourself, I would like you to tell us, what do stablecoins and tokenized real-world assets mean from your perspective? And what are they disrupting in your world today?
Good. Thank you. I'll start. My name is Ali Erhat. I'm the Senior Executive Officer of Zodia Markets AME Limited, which is our regulated entity in Abu Dhabi Global Markets, UAE. We're a regulated OTC brokerage backed by Standard Chartered, and our primary product or service is cross-border payments and on and off ramps, which is fiat versus stablecoin liquidity. Thank you.
Hi, everybody. My name is Mouloukou. Can everybody hear me properly? Okay, perfect. Yeah, so I'm the CEO and co-founder of MANSA. At MANSA, we are the leading stablecoin liquidity provider for payment companies globally. We help payment companies in Africa, Latin America, and Southeast Asia settle their transactions 24/7 without the need for pre-funding. We've done over $200 million in transactions so far in our first 10 months. And the question, what does stablecoin mean?
Yeah.
Stablecoins means everything, because if you're a business in emerging market that has no access to dollars, that has a currency that's devaluing 30 to 40% on a year-by-year basis, you're completely screwed. So stablecoins are really a lifeline to help those previously excluded economies from actually being financially included and actually having a lifeline for its people and its business.
Thank you.
Hi, everyone. It's Ali. I'm one of the co-founders and the CEO of ARF. We are providing same-day settlements to financial institutions, regulated companies all around the world, from banks to any kind of small institutions. And we also provide liquidity and integration to other DeFi and PayFi tools, you can say. The idea is actually helping companies to settle with any kind of stablecoin or asset, mostly helping them move their treasuries same day, which is mostly impossible in fiat. And we are also one of the first builders of PayFi, so we are building lots of applications there to bring together the two worlds, like you can say, Web3 and Web2, or TradFi and DeFi. And yeah, it's basically like that.
Thank you. So let's move to our first theme, institutional adoption and the global finance. So I will start with you, Ayat. How are institutions like Zodia Markets facilitating cross-border payment using stablecoins?
Yes, thank you. The one common thing which we all mentioned in our introductions was speed of settlement. And I think that is really the crux of why stablecoins are being adopted. Right? Because my background is foreign exchange for 20 years, and I've grown up, before I got into digital assets, hearing T+2 settlement. And in this day and age, it's not about days, it's about hours and minutes. And that's really the most prominent use case, in my opinion, for blockchain. So how we are facilitating it is, it's imperative that we make this use case of blockchain accessible to institutions, to individuals, to professional investors in a more trustable and safe and secure manner. And I think that's what's evolved in the last 5 years. We've obviously had a bad history as an ecosystem with some compliance mistakes. And I think us being backed by Standard Chartered, we've sort of taken a lead in in really going the extra mile, even sometimes at the expense of growing slowly, but doing it properly, where compliance, KYC, legal structure is imperative to gain the trust of institutions. So for us, regulation, compliance is really the bottom line, because otherwise we cannot build a sustainable business. So just to share, we're facilitating commodity companies, large corporates who've got multinational payments to make in various currencies, and to do it with the support of Standard Chartered is really what institutions are craving for, because they trust Standard Chartered as a TradFi institution, and now that it has its investment in digital assets, it's given the whole adoption move a lot of wings and acceleration. So I think for us, that is the bottom line, to give institutions a regulated, safe, secure platform to then build their business and operations around blockchain.
Yeah, and as said about the regulations, I want to ask everyone, what are the biggest regulatory hurdles that you are seeing at this level?
So for me, the hurdle is a lot of these TradFi institutions, they don't know how to set up their operations, right? So I speak to clients and they're like, I understand stablecoins, I understand how it will benefit us, but where do I start? They don't want to be onboarding with 5 different companies, one for liquidity, one for custody. They don't want to head bump with their bank, which will not accept stablecoins. So it's a whole ecosystem play where, as participants, we need to provide them with an easy access so that they can utilize it. So the problem or the challenge now is different companies are doing different things, right? And if you're the CFO of a large company, you don't know where to start. And I think that's where regulation comes in, where they can go to, in my case, Abu Dhabi Global Markets, or mashallah, Turkish regulations are evolving very nicely as well. They go to the regulator and they can get guidance from them and recommendations. So I think, again, it comes down to regulation, which will encourage corporates to adopt. And I think Turkey is taking massive steps towards that.
What about you, Mo?
Yeah, I think particularly in payments, regulation is everything, especially if you're running a payment company or running a payment adjacent company, you're essentially in the compliance game, right? So I think with acts like the Genius Act, we are getting more regulatory clarity, and I feel like the better regulatory clarity you have, as Ayad has been saying, the more institutions will be more willing to adopt like digital assets, and especially like when it comes to like stable coins, because if you look at the market for like global like cross-border payments, it costs maybe on average of like 5 to 6% to send money to Africa, Latin America, and Southeast Asia. Like stable coins can like reduce those costs by 90%, but like a lot of the big fintechs don't want to like adopt that till they have a lot more guidance from the regulators into how they can use stablecoins, into how they can work with regulated players like Ayad here to like on and off ramp in a compliant manner. I think like regulation is what we need to really go from 3 trillion in stablecoin transactions to 100 trillion in stablecoin transactions, like, and make stablecoins a lot more used in the day-to-day.
Yeah, and Ali, would you like to say something about the regulations?
Of course. I mean, it's all very, very facts that we experience every day. But I think the compliance and regulatory hurdle is in the means of asking the question: who is taking the risk of that transaction, of that activity? And at the end of the day, we push it to the regulatory frameworks, we push it to the licenses and players, but in the new world, it's Web3 discussions and everything, it's still becoming clear and clear that who is taking the risk, but not all the big players, like the top banks, top regulated institutions, are diving into that risk discussion today. They are waiting for the dust to settle it. So regulators are also trying to understand the risk in that perspective. But I mean, at the end of the day, it's about at any point of the transaction's life or the activity's life, who is taking the risk in what stage and how they are regulated, how they are responsible to take that risk. And yeah, we are going to see more and more development, hopefully, in that area.
So, are tokenized financial instruments really gaining traction with institutional clients? How do you see it?
Yes, they are. So we see requests, curiosity, interest from large fixed income funds in Europe. We see interest from real estate companies, which is the most very popular across the world. I've even had conversations about coal mines, oil rigs, music albums. So it's growing, and there's obviously naturally there's a lot more interest in tokenized U.S. Treasuries. It's the most liquid asset, everybody trades it, and that's in some ways the low-hanging fruit. But we have to quantify what attraction means. Compared to the size of the US Treasury market, the tokenized Treasury market is still tiny, right? And it's going to go through its journey, and there will be growth in the next 3 to 5 years. But it's imperative that we all, as an ecosystem, stay on the track of compliance, making it easy for institutions to think about tokenization as well. And that is the key. It takes one little accident of messing up a KYC or not doing your transaction screening or monitoring properly, and the whole asset class takes a hit. So I think it's very early stage. Most of the volume is in treasuries, and then there's conversations in other more esoteric asset classes. The advantages are clear. Fractional ownership, it's transparent, it's more accessible. We have many people around the world who are unbanked and they don't get access to these investments, but they can. But it's our responsibility to help grow it in a healthy way. Not necessarily fast. I keep saying this, I always don't mind slow growth as long as it's safe, stable, and sustainable.
Yeah, thank you. And I would like to shift to emerging markets and the infrastructure. So, Mo, let's begin with you. So what makes stablecoins particularly appealing in the emerging markets?
Yeah, so I think why stablecoins have become, I believe, the killer use case for crypto, especially in emerging markets, is a few main things. Number one is, in many emerging markets, if it's Argentina or if it's Nigeria or if it's somewhere like Indonesia, you're devaluing, your currency is devaluing against the dollar anywhere from 30 to Argentina maybe like 200%, like over the past 5 years. So if you're a emerging market consumer or business holding these local fiat currencies, your money is essentially worthless. Number two, it's incredibly hard to get dollars. And in many places where it's a very import-heavy market, where you have to pay for dollars for like everything, if you don't have dollars, then it makes you incredibly uncompetitive in the global market. So like stablecoins like enable people to, number one, hedge against local currency devaluations, and number two, most importantly, access dollars. So you're not limited by the number of dollars that are inside the market, but what is on chain, which is what I believe as of yesterday, 300 billion. Number three is many businesses and consumers in emerging markets are unable to send money back and forth cheaply, right? Like as I mentioned earlier, Western Union's anywhere from like 5 to like 7% with like on top of FX and all these things. So stablecoins like enable you to send money to anybody around the world so much quicker, so much more seamless at the fraction of the cost. So stablecoins are really like a lifeline that make previously excluded financial economies be able to seamlessly interact and be able to seamlessly move money in and out of different places, and also to essentially act as a hedge against their local currency.
No, thank you. And how does MANSA's infrastructure enable the real-time payments and cross-border settlements?
Yes. So essentially what the MANSA infrastructure does, so we have a embedded like financial treasury solutions where we embed into some of the largest fintechs globally, and then whenever they want to send their transactions anywhere around the world to any of these like emerging markets, we essentially pre-fund the transaction for them in stablecoins, helping them settle the transaction in less than 30 seconds globally, 24/7 around the world. Right, and then like we're also building other capabilities on top, such as like FX, such as settlements, and so on and so forth. And we've done $200 million across Africa, Latin America, and Southeast Asia in our first 10 months.
Can I just add one
Yeah,
more
please.
thing to
Yes,
Mouloukou?
please.
So just to continue what he shared, I think this is precisely the reason why digital assets have been adopted a lot more sort of wholeheartedly in countries like Turkey, Egypt, Lebanon, in my country, Pakistan, India, because these countries had the issues that and the challenges that Mouloukou highlighted, right? And US, Europe were slower with regulations. So I think because these countries adopted from a societal level, right? Obviously, you go to Grand Bazaar, you can change. So that's an example where common people are using USDT. And I love sharing this one example. I used to run a small startup many years ago, and I asked a freelancer to build a website for me, 2-3 pages, and he was an Egyptian kid, college graduate. So he asked me to pay him in USDT. And I was very impressed and surprised as well. And I asked him why, out of curiosity to see his answer. And he's like, if you pay me using a traditional bank, you're going to pay me $200, I'm going to receive 160 or 150.
Yeah, of course.
Whereas if you send me via Tether on ERC20 chain, it's going to be cents, and it's going to be instant. So this was 5 years ago. So it's really magical, and that's what inspires me, basically, because it affects the common man's net income. And we'll talk about remittances soon as well, but this is a societal benefit of blockchain.
Definitely. And like just to add to that net income point, right? If you think about it, let's just take the biggest remittance market in the world, India, which gets like 100 billion reported per year. And the average fee is like around like 10%, like when you take in all the, like FX charges and stuff. So you're telling me that that senders are paying $10 billion every year just in fees. Now, so if stablecoins are able to like reduce that by like 90%, that's billions of dollars in savings to the end consumer, like which is really like what we all want to do.
Stablecoins are really, really very popular in Turkey also. We are using them a lot. Not legal, but yeah. Okay, so Ali, let's wrap with a focus on payments. So what problem is PayFi solving in the stablecoin ecosystem?
It's a great question. So there is this, the approach my fellow speakers highlighted is like, it said there's a bottom-up adoption curve, like the use cases for consumers, businesses, merchants, and there's also a top-down use case that we are focusing more and more on the PayFi concept. The PayFi is like, there's this TradFi fully regulated and opaque, and DeFi is fully transparent and not regulated, and PayFi is like the bridge in between. Like we definitely believe that the biggest adoption of Web3 and blockchain and stablecoins, everything will be in payments, the biggest adoption. And there are, I think, two ways of this adoption. One is the bottom-up curve, the other is the top-down. And we are definitely working more and more on top-down side, on PayFi, trying to bring all the institutions, regulated financial institutions, banks, whoever working in payments, together in an ecosystem with some open tech stack and also some missing parts where the TradFi is really not having or couldn't bring. And we are also bringing the power of traditional finance, regulation, etc., to the concept. So PayFi is like bringing an ecosystem together to solve the adoption problems, bringing use cases to different locals and regions, together with the top companies playing in those regions.
And also, what signals of adoption are you seeing from platforms, PCPs, banks and neobanks?
Would you repeat?
What signals of adoption are you seeing from platforms and neobanks and banks, of course?
I mean, we are seeing huge adoption on the remittance companies, payment companies, in cross-border. I think the stablecoins miracle is in cross-border. It's not like in local. Like, I mean, let's say we have a Turkish stablecoin. We have a very good banking system as well. If we have it, then stablecoin is like it's okay, but it's just a replacement for the good banking system, maybe a good moving of money. But if you get into cross-border, there is no real, you can say, centralized mechanism to, I mean, dictate how to move money in between partners, how to get the effects and everything. And stablecoins really create definitely a mind-blowing use case there. So in cross-border, like all the cross-border payment companies, banks who are moving money in cross-border, global payments, card acquiring, trade finance, there are lots of adoptions, especially with the help of not only the stablecoin issuers, but also the local stablecoin providers. Because now, for the first time, a local stablecoin makes sense with another local stablecoin, maybe without using any dollar, or maybe with using dollar, creating a good FX rate. And also, we are seeing a huge adoption around the local on-off ramps to stablecoins, like great FX rates, great liquidity, and it really helps financial companies to move more and more volumes to stablecoins. Although today it might not really matter that they start with fiat, end with fiat maybe. This is today's use case. Maybe in between there's stablecoins to make it very fast in cross-border. But at the end of the day, the adoption will evolve, and we'll see more and more partners also continue to settle with stablecoins along their network. And from top-down discussions, also I can tell that the financial companies adopting the stablecoin and other local stablecoins, you can say, they can start also propagating or settling with their own clients locally, merchants, maybe consumers. They're also getting maybe stablecoins in their wallets instead of fiat or instead of local currency, which will definitely change the adoption in the long run.
So the future is bright for all of us. So, and for the group, for all of you, what are the remaining technical or institutional gaps to solve before stablecoins become a standard in global payments? What do you think? What are the gaps that we need to fill? We can start with you.
For me, the main gaps are definitely in regulation. You can say not in technical but financial, but regulation is a key because stablecoin people trust stablecoins to be pegged to dollars, and they want to see that. And regulatory framework requires to start at least enable some sandboxes or allow some merchants to pick up stablecoins and convert. On the technical side, I think there are still a lot of missing pieces in even institutional grade custodies and FX geared only for payments. I mean, you can say there are a lot of great products around for custody and FX and settlements for treasuries and asset managers, but for payments it's still lacking today. So I believe the next wave will be more around. We are going to see more and more payment-oriented ecosystems, payment-oriented financial toolkits, infrastructures, and more activity on the regulatory side as well.
Yeah, and just to add to what Ali has perfectly explained, like I think above regulation, what we need is seamless infrastructure. And there needs to be seamless infrastructure across the whole stack. So from the retail angle, you must have seamless on and off ramps. From the institutional angle, you must have regulated players like Zodia Markets, where I, as an institution, feel comfortable enough changing billions of dollars at the lowest possible fees. And then also it's the infrastructure for having businesses to be able to accept stablecoin payments. So you have your POS systems, so you have your virtual cards, so on and so forth. So in order to make the reality that all payments will eventually go on chain, we must create the necessary infrastructure, the necessary environment, and also have the necessary regulation, as Ali has said, to make that dream into a reality.
I'll take both their comments, which are spot on, and just say that these two things need to happen across the globe. So there's one feedback I get from clients, let's say in UAE, is I'm very happy to receive payments in stablecoins, but my counterpart, my trading partner in, take any other country, is not yet ready for it.
Yeah.
Right?
Yeah.
So we need two to tango, right? So that's where this evolution of regulation, not only in certain pockets of the world, but around the globe, and then the technology being the seamless infrastructure that Mouloukou mentioned, has to be available to everybody around the world so that people can then talk, because it's a very much a global ecosystem. Global trades are happening, so if one side is ready and the other is not, it's not going to happen.
Thank you. And for the last, I'm asking all of you, so where do you expect the biggest breakthrough regarding stablecoin adoption in the coming 12 months? Coming from institutions, governments, or end users?
So I think it'll be institutions and governments. They're sort of very close to each other, governments and institutions, because the early growth of digital assets was very much retail. It's probably the only asset class, at least in my memory, which started with retail. And normally it's institutions or VCs that kick it off. But it's definitely institutions, governments. The BlackRock's ETF sort of gave that wings. It's given acceleration to regulations around the world. And the reason I have high conviction on this comment is, when I speak to our clients who are large corporates, think of their treasury's point of view. If they have a $100 million payment coming in from their trading partner, and if they can receive those $100 million in 5 hours instead of 5 days, that is hugely beneficial to their working capital management, their balance sheet management. They can put that capital to work instantly. Basic, they can put it in a bank and earn interest rate yield, right? And interest rates with 10-year treasuries at 4.2, 4.3, that's real money. So they no longer have to wait for the weekend to go away or a bank holiday. They get it in 5 hours and they put it to work again. I think that is powerful, and that's driving these decision makings in boardrooms to adopt stablecoins.
Yeah, I have to agree. I think, but I'm gonna, so I out here is more talk about financial institutions. I believe that the biggest use case right now, like obviously like apart from trading, is in payments. So, and I think like within payments, you can further segment it into B2B payments. So businesses sending money in and out of emerging markets, or emerging markets to China, like where like you see most of the stablecoin flows, because even in China you have capital controls. And then it's remittance. And then I believe it's also going to be just people in emerging markets just adopting virtual cards so they can pay for goods and they can pay for services in stablecoins. Or I believe also just like what Ayad is doing at Zodia Markets is the on and off ramp. So institutions wanting to go from fiat to stablecoin to fiat, so on and so forth. But I am incredibly bullish that stablecoin adoption will continue to rise, or we are all out of a job very soon.
Oh, yeah, I fully agree. Of course, I also think the institutions will be the biggest adoption point in the next 12 months. But a funny fact, I think we'll also see some big adoption coming on the local stablecoin issuers as well. And they will be exploding. Already exploring, but right now we are seeing very high adoption on that point.
Thank you. Thank you so much to all of you for your insights. And I hope we managed to give you a broader understanding of the future of stablecoins. Thank you for being with us, and thank you for coming.
Thank you for having me.
Thank you so much, man. Thank you so much, man. By the way, we'd love to talk.